The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour on this Wednesday, the 30th of January. My pleasure to be here, and this is actually a very important couple of days that we're looking at. You finally got the stocks that were just really very weak that have shown tremendous strength after earnings reports. You've got Apple. Yesterday, got the earnings report. Overall, it was probably the best thing to say is that it was a lot better than people thought. I'm not so sure that it's telling us a tremendous amount yet about the year. I think the next quarter will be the March, April, May, June quarter will be the one that really tells us. But it really is positive that Apple has spiraled higher, that Boeing has put in a fantastic session so far. It already started the turn just recently. Remember, we were discussing it. It already made a very strong rally off the low. It had a pretty darn sharp correction. Monthly chart formation is one of the better ones out of all the sort of long-term charts that we've been looking at. We'll go through that. So the Dow's up 367 with the Fed about to speak in an hour and a half, well, almost 2 hours time. And we'll see what they say. What are they going to say? They're going to say too much, I don't think. They're going to have a wait-and-see attitude. Dow's up 366 at 24,946. The 24,900 area is going to be strong resistance if it closes above 25,050, preferably 25,150 by Monday, this coming Monday. I would have to tell you that that makes it really important that we look at the December 24th and 26th low in almost all the indices as pretty significant. If anything, it is the low, but now we have to wait for the residual low. In other words, many stocks will not go back to those lows. Some stocks will, some stocks will break them, but the majority have made internal lows, and now we're looking for this residual low that is like the aftershock. Is it going to be such bad news that it takes the market back down to 21,712? I don't know what could do it, but there's enough out there that it could, but it's going to have to be a conglomeration of maybe 2 or 3 things coming simultaneously. And so far, we have to say that the Fed is a little bit out of the picture, at least for this very moment, at least for the next hour. So the Dow is up strongly. The S&P, we're waiting for the S&P to make that leg D, and that would be above 2675.47. I think at that point, we've pretty much done everything that we want on the upside. Then you can see a choppy sideways move. I still put in, I'm going to do that right now. I'm going to put in this oval pattern here because we have gone sideways. First time we've gone sideways like this without a choppy down or a choppy up, just plain old sideways within a pretty narrow trading band. And that's going to say a close in the S&P above 2685. Says that the 2696 200 period moving average could be hit in the daily chart for the very first time since it broke down December the 4th, where it was up in the 2750s because it went down to the 2345 level. So this is sideways, using up time more than price, trying to fulfill that talk that was set in motion over the first week and a half of January. Now the momentum has to be continued by the MACD, and it's starting to show the histograms starting to decline a little bit. But you can see from this 2 and 5 and 10 minute chart that I'm showing right here, we've just gone to another leg D. I showed this earlier in the den this morning. I said, so far the E-mini is holding very well. It's had a couple of buy modes in the 2 minute chart. A couple means that, in fact, if I pull this across, you'll see from the low this morning at about, not 10 o'clock. Let's go to the one earlier when I showed it at 6 something. Yeah, the low that was made back at 5:16 this morning at 26.44. We're only pushing up 20 points from that, but look how beautifully it's gone. Peak A, B, C1, C2 pulls back. A, B, C, D, E pulls back pretty sharply. That was a very sharp pullback from the 26.55s down to the 26.48, 49 level. And then it started another big rally. That was a rally at 8:30. And now what we're looking at is it's gone to yet another peak E in the 26.56 area, pulls back again to 24.47. And this last move has been really one where you would have thought that waiting for the Fed would create a little bit of weakness. But instead, from 10 o'clock, we've just steadily moved higher and higher and higher. Peak D, then it goes to an alternate count F, pulls back, makes another D as we're speaking at 26.65. Round number high so far. I think it's trying to take that out a little bit. And then I think it should start to pull back. And you'll see the reason why I'm saying that is that we've probably made a leg F in the 5-minute chart. There was a 2-minute chart. The 5-minute chart, look at the way it's held all the moving averages. Look at the way the MACD histogram is still positive. Look at the way the fast-moving average of the MACD is still strong. And you've got a leg C in the 10-minute chart. This is you should still make in the next hour and a half, should still make a peak C and then a leg D, and then maybe we take a breather as everyone awaits the Fed. Let's get back to our story, the QQQ. Now, the QQQ's made a peak D just like the Dow. They're still stuck in the range. Let's draw the oval in right here. Why am I drawing the oval in? Because it has that pattern that we call Chapman wave stalk leg formation. And it means that you go sideways, and it has to be in an oval pattern, not in a rectangle. And then all of a sudden it breaks to the upside, looks like it's breaking out, and then very quickly after that, it starts to pull back and it retests the body. So this becomes the leg, the body, the neck, and the beak is where it comes back. And then you get another strong rally, and then you're on your own. So the parameters to watch at 164.01, up 244, up 1.51. Dow's up 1.51%. And the S&P is up 0.98%, lagging a little bit. This is very good action, but it hasn't taken out the high of 166.02. I think this is kind of stuck in the range just for now. Really good action, but in the range. And the IWM at this particular point is up only 0.63, up at 147.12. I mean 0.63%. It's up 0.91. And this is actually a little bit better of it. I can't even put the rectangle formation, sorry, the oval, because this looks more like a rectangle. So this is holding very well. We'll see what happens, because it was lagging. It was leading earlier in the year, then it was lagging, and then it started to lead back from the low of the 26th of December, and now it's sort of lagging again. We'll see what happens. I think it's had a chunk of its big move going on, and now it's sort of stalling. Gold is up 0.8 at 13.16. I think we've got a leg D. I'm treating it as a leg D right now. Yes, it could be a new breakout leg A. I'm treating it as a D until there's more evidence. Why? Stochastic rallied very sharply to 84%. That's good, but it's like one single move to the upside. MACD crossed positive, but isn't even close to where it was when the gold contract was in January the 4th. It was at 1306. That was the number that I changed. Yeah, 1306.6. And we'll see what happens here, because this is a fabulous move. It's just gone above the weekly 200-period moving average. I would not be surprised if it's ready for a bit of a digestive phase. Let's see what the dollar's doing. Is it rallying? It's running a little bit up 0.4. It's really acted very well considering what gold has done. I'm right back. That was a 73 Basil Chapman Tiger Technician's Hour.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Operandi. Okay. Hi, folks, we're back. So the Dow's now for a little more. It's up 386. S&P's up 27. Very exciting dollars. Just holding in very nicely. It should actually be way low. It should have hit the 200-period moving average of 95.33. Well, see, you've got the Fed today. You've got, you've still got, what is the British pound doing? British pound right now. Whoops, all right, I typed that into the 10 instead of here. See how the continuous contract. Peak D just made a peak D right in the daily chart, pulling back a little bit, went over the 200-period exponential moving average. That's a hell of a move. 1.25 to 1.325. Whoa. That's good. 1.30 right now. Look at that weekly single A leg up. I think that the pound can just consolidate for a little while, help the dollar a little bit. We're looking at things independently now. I think it's been established that the gold is on its own. It's in its own satellite, its own orbit, and you've got a separation now. There's not a direct impact on the dollar. Dollars being affected by other things. The euro, as you can see, has had just terrible, terrible action. It's just stuck in this low range, but at some point it will break either down under 1.125 or above 1.15, 1.58. Yeah, close to 1.55. I'd like, nah. Yeah, it needs to get to at least close to the 1.16 area. And right now it's at 1.40, So it's just not looking good. USD JPY, actually, I want to get a lot of questions came in. I want to get to them. Yeah, sideways, USD JPY, not breaking down, not breaking out. It's amazing with that candle, the Chapman Roman candle from the 3rd. I'm sorry, the 3rd of January, below 105.18. Here we're at 109.56 after 4 weeks of traveling. It's still moving to higher highs and higher lows. Not bad action, I must say. Okay, what am I forgetting? Silver. Let's do silver quickly. Silver right now, SI breaks out. It's now in a leg F/B. In the daily, weeklies in a leg C. That says the way it's acting with a stochastic at 82% in the weekly and the MACD strong, it should go higher. It should go to the 1635, 1658 level. And but it might need a little bit of a breather coming up soon. Okay, I've covered that. Crude oil was up. Let's see if it's down, up, $1.47 at 54.78 right now. leg E. MACD is good. Stochastic is at 76%, but on balance volume is good. And look at this. The weekly chart has just for the very first time gotten really close in the weekly chart. Minus 3.93. It's really close to crossing positive for the very first time since it broke down way back in about September of last year. 79, October of last year, it hit 76.90, plummets down to 42.36, 42.36, double check. 42 because it gets smoothed out. Oh, now it's 42.60 because it got changed. It's a continuous contract, so that price can always change as it gets smoothed out. 42.60 trading at 54.78 right now. Hey, I like this as good action and it's good market action. I want this to be moving nicely. So let me just have a look at the Nifty, the TLT. The TLT should be down a little bit. It is. It's down 28 cents. As the market's rallying, money's kind of coming out of bonds a little bit and going to stocks. Not any big thing yet. This is the way I measure volume. I know people, you talk about volume, they have their own ways. I haven't got it in front of me. There's a really interesting article on volume, just an intense look at volume in Stocks and Commodities magazine this month. I use volume, but I use on-balance volume, and I use the relationship of volume going in and going out visually that I can see between the TLT and stocks. Just keep it as simple as I can. So that's interesting, but that's enough of that. I want to look at questions that have come in. First one was from, so Kevin asked, is this a perfect time to short the SMHs? Well, let's have a look. There was a big red candle yesterday after two big green candles in the SMHs. Well, I have this left side, right side price time match. It never went to 99.13 in the time that was allotted, which was today's the last day of this particular one with the measurement that I had. It could move to the right because the plumb line could not be the exact low that was made on the 26th of December at 80.71, but you have to move it, you have to know which candles to use, etc. So the Chapman Wave inside wedge targeted the today as being the day that it needed to get to 99.13. The high was 97.25 4 days ago, and look what happened. Today, let me move this arch right there. We've got a little doji candle, and the MACD is very strong. Stochastics at 81%, on balance volumes turned down. Relative strength, that's this little gray line over there, is okay. It's not great. The histogram is starting to shrink just a little bit. So my answer to at the time was I sent an email back saying, I don't think I've got to just get, it's very close, but because the person is wanting to use the 3 times short, that makes it neat. You really have to time it perfectly as we did Tuesday a week ago, and then all of a sudden the next day it just flipped around. You got to be so quick with these things. Either you are immaculately correct or you are wrong. So I said that I need to wait a little bit. I want to see how this plays out, maybe today, maybe tomorrow. I'd like to see if there's a chance, even after the Fed or whatever happens, there's a chance that there is a move in the SPY just above the previous high. It doesn't have to happen. It's something I'd like to happen. It looks like it could happen. Yeah, sorry, I just have to keep liquefying my throat. Did a lot of talking last week, and just want to make sure it doesn't get all scratchy. It's at 266.04. All I need is 266.99. We've got our leg D. We're close to the 200-period exponential moving average. The MACD, we'll see where that is. The stochastics already started. Remember, stochastic in the Chapman Wave, this is what we studied a week from yesterday in my all-day webinar. The way the stochastic acts as the torque, it hands it over at some point to the MACD. The MACD is the momentum, the turbo that has to continue the power, to continue the price movement up or down. And in this case, you've done everything you wanted. You've got to your peak C. You've pulled back, but you haven't broken down. You're holding the 9-period moving average. You're holding the 14-period moving average. So far, everything's good. I don't have any sell signal yet in the SPY. It could come soon. Hasn't come just yet, and the weekly chart is still very strong, and we're really close to crossing positive. Let's see what happens on Friday at 4 o'clock, whether or not there's a pullback before then, or whether we actually see the MACD in all these different indices cross positive. That'll be very important to me. That's the SPY. So the answer, that was the SPY, but I wanted to put it together with the SMHs, saying the SMHs, it's important right now that there is some kind of rally. It doesn't have to be big. It's up 1.56 in the semiconductor ETF at 95.38. Just that it's moving a little higher and above yesterday's red candle. And that says to me that there's a chance that we could go a little higher. I'm anticipating either a failure under 97.25 or maybe just a modest new high above it. And then we're really close in time to what I think should be a pullback. But all I can say right now, because of the strength of the MACD and stochastic and these different indices, and the fact that this MACD has already crossed positive, all I can say is you better be a little patient. Dow's at 360. I'll be right back. Basil Chapman, got about 5 more emails coming in. I'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, so let me go back to where I was. Yeah, so let me just see. Okay, still confusing with your message regarding retest or off the shot. Because didn't you talk about what on earth would create a retest or getting close to the December lows? This type of assessment sounds much more like based on fundamentals versus technicals. What happened to the weekly or monthly H formation that could retest or get close to the lows versus thinking about fundamentals that would create the downside? Thanks. So, okay. So I'll talk about that in a moment. Just during the break, I had a question about NSRGY. I thought, NSRGY, have I ever seen NSR? Yep, of course I have. It's Nestle. I forgot about that. Nestle, SA-ADS, although I'm a Cadbury's man myself. So yeah, this is at 86.85, nice V-shaped pattern. This is very interesting. I'm going to have to take more time on the monthly chart. I don't want to do this very quickly, but it is at 86.85. It is just a whisker away from the 88, 89 all-time high that was made back in May. So June 89.4. So let me do some work on this. Remind me again, and I'll do it. But I can't. All I can say, this is outstanding action in the daily chart. The weekly chart in one move has gone from the low that was made in December to almost a recovery high in a single leg A. So this is very good action. If you're in it, stay long. If you're looking to go long, anytime it pulls back to the 84.5 to 83.5 area, let's look at it again, because that's where I think you would want to enter if you aren't in already. Okay, now let's go back to the question. So I just want to do this because, although it's not Technical Friday, this is a question I'm getting from a lot of people. So I want to just deal with it now. I'm going to look at the Dow, and I'm going to show you something interesting. You see the way the monthly, look at this very long-term chart. You see that the, where can I put it? Yes, in terms, I haven't done this for a little while, so I need to just extend this line. This is a very long-term trend line. There it is. And just for now, I'm going to make it kind of thickish, make it blue, make it thick so we can see it. I should make it red, but I'm just going to keep it blue, give it a big weight. There it is. You see this dashed line? This dashed line says this is still an uptrend. You see the way you had in the Dow, you had a very strong January of last year, 26,660, MACD stochastic, all perfect on-balance volume. Then only up until now, the on-balance volumes held beautifully, but the MACDs failed. Look at that peak F at 26,951 in October. And now look, the MACD's lousy, stochastics really poor at 61%, and yet the price is above the 9 and the 14-period moving averages. I have to look at price, and I have to look at this and say, well, my anticipation has been that there will be some kind of an arch formation that has a test coming, and that test will be either above, right at, or just below the previous major low. That's the one of 21,712. As we're speaking, we're over 3,000 points higher. Now, some charts, if you look at the weekly chart, we went down 4 months. We are now turning around. I'm not including the December low. I'm including it only from January. We're up 4 months, even though the last couple of days of December were really spectacular upside moves. But it's really the January candles. And they've taken a little longer, and I've drawn in the arch formation. It would not surprise me if at some point we tested the mid to low 23,000s. Whether we break that or not is going to be key. But the fact that even now, today, we're higher, even on the Dow, we've made a new recovery high, is essentially raising the base. But I still have the chance of an arch formation. If I'm looking at the weekly chart, let me show you the weekly chart. Yep, there's your huge arch formation. I'm taking it from the low of about 20,583, somewhere around mid 2017. Goes all the way up, makes the drop bucket pattern, that cup formation, with a large arch. Remember, this is the upside down dreaded H that turns into a very positive U formation. And this U formation inverted becomes the arch, and we've come down, we've done a retest, and in this particular instance, the low that was made was way lower than, of course, the low that was made back in 2017 in that 20,300 or 500 area. So this is a brand new start, and the MACD on the weekly chart is really close to turning up for the first time, and we'll have to just watch it. That's all I can say. And the stochastics at 58%. I do believe there is going to be a plethora of bad news that comes out and really just knocks the market down. And whether or not it's able to, and that's the reason why I said, I don't know what we can have coming up that is going to look so bad that takes us to the kind of December 24th and 26th lows, that kind of sell-off. I just don't know. Things can happen. I just don't see it right as we're speaking. That's the reason for my subscribers. We are still long. We've got long positions. Some of them are fabulously. We had one that we bought yesterday. People who missed it got in again today. And it soared from the $7 level. It was actually at 6.90 earlier this morning. It hit 7.45. This 7.45 earlier this morning, and now it's pulling back a little bit, digesting those big gains. So all I can say is that we're trying our very best to look at the positive side and stocks that really look like they've got internal strength. And then we're looking at others that have run through a lot of internal strength and now might have to see some pullback, and that's what we're going to be looking at coming up over the next few days. We just see the E-mini. Did it make that peak D top? Yep, there it is. Peak D right there at 2667 round number. So this doesn't get a plus sign anymore because the price is, this is the E-mini 2-minute chart, and you've got a leg F to the upside. I think now we stall and we wait. And of course, I've only got a C in the 10-minute chart. That's a good sign. So down arrow on the 2-minute, down arrow, and the 5-minute. We'll see what happens with that. 4-point pullback, big deal. We're up 22 points in the E-mini. So, okay, let's get back to our story. So that's it. So I'm going to answer the question by saying I still expect an H formation, but I don't know if it's going to go all the way down to the bottom or whether it's going to be an aborted H that stops at a certain point and then we start the big move to the upside. I don't know if all the little actors are in place right now for the big move to the upside. I think they are coming in place, and one by one, we're seeing them act well. Boeing, I was asked about, yeah, Boeing right now is up huge. It's up 25 at 39.40. This is a leg D. We were waiting for that. I did the study yesterday, the day before. I said it's got a cup formation. I've got a Chapman inside wedge target line that says it should get to the high that was made back on the 8th of November at 373.70, and that should happen yesterday. It didn't. It happened 2 days. Sorry, should have happened 2 days ago instead of it happened today. And it's gone to a leg D. And where does that put it? It puts it into a leg B in the, it's a gray B because it's under the 394.28 all-time high. Spectacular move in the monthly chart, and that's why I drew the oval pattern. I said, we're going to watch this. Does it come all the way back? I had what I call a sell signal. Not really, but we'll be back. We'll talk about that in a few moments because this is an important stuff. We'll be back.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. No
matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So to reiterate, I'd say that I thought Boeing would take a lot of time to consolidate. It took about 4 months, and then finally it hit a low, and it's rebounded spectacularly. It's got a backlog of decades. I mean, it's just unbelievable. In the den, one of our dentists made a good comment today. He said, Boeing sells as many aircraft as Tesla sells cars. I mean, it's amazing. So Apple, nice gap up, but the chart is still looking very poor. I suspect Apple's going to need a lot of work to really get going. And that's another reason why I want to be looking at this to say that there are enough stocks that I think that we're going to have a very choppy period coming up. But I think it's sometime in February we start to see the rollover with a big test of support coming. Next question I had was, Salt, there's a good one. Salt is Scorpio. This is a shipper, a dry bulk shipper, I believe. Scorpio Bulker. Yeah, it's a bulk shipping company. Down 10% at 4.76, $4.76. If you look at NAT, which is Nordic, what is the full name? Nordic American Tanker. Nothing to see here, folks, yet. Nordic American. So this says to me that we're not yet done with the whole corrective process. So we've got a couple of questions I want you to go to. REFR we're going to look at, and we'll also look at for UWM. But we've got a caller right now. We've got Ben in Tallahassee. Ben, how are you?
Great, Basil. How are you?
I'm well, thank you. Question away.
Awesome. Well, this might linger or transition into tomorrow, and I actually have to get going. But so, you turn on the radio and every other station, you can hear the talking heads talk about China and the trade deal. And I tend to agree with the majority that, let's just say, right, this Friday, all of a sudden, trade deal is done. All the U.S. Demands have been met, and China's happy with their side. Don't you agree that any concern about going back to December low or any concern at all about the market going down would be over with, and this thing would just jettison up 2 to 3%, and now we just look onward and upward? Or what are your thoughts on that?
Yeah, so that's a very good question. The answer is, in the short term, absolutely. If there's anything that resembles some kind of a trade deal, but remember, with a trade deal with China, it isn't what is said at the announcement. It is what is understood by the various parties 2 weeks later. How many times have we had a complete, absolute agreement with some countries, and like a week or two later, their side says, wait, this is what we agreed to, and the other side says, wait a minute. So I think it's going to be very choppy and very hesitant. My analysis right now is that China, from everything I can see, I don't read too much about China, other than just hearsay, things that I hear sporadically. But my chart says that China's FXI. This is the very big iShares. This I think it used to be called the 25, but it's the iShares China Large Cap ETF. It made an important low round about the 19th or 20th of December, a little bit before, sorry, January, a little after us. And this is a very good rally to the 9-period moving average. It too has made a peak D. The weekly chart is improving a little bit, but from everything I can look at, this chart says to me, it's almost like the copper chart. It's almost like some of the other, the commodity chart. It says more work needs to be done before it can really have a big rally. And I suspect that whatever they say, it's whatever they do. They are, I think, behind the black ball. They are the ones that have to make the move. That's my contention right now. Everything I'm looking at suggests that it's China that's going to have to make the compromises. The first time we've seen that in decades. And they're reluctant to do it, but they might be forced to do it. So all I can say is yes to your question or statement that when China, if they start to agree, we'll see a big ramp up. My other side of it is that when the wheel hits the asphalt, or whatever you want to say, when we finally come in for the landing, China isn't quite understanding what they were supposed to be doing, not to what we're expecting, and that the reality and the anticipation, they don't quite coincide. It takes a while for that to happen, and they are intransigent. They are very reluctant to make changes, and they think they have the upper hand because of Trump, but I don't think that's quite the case. So I'm looking at this and I'm saying, I like your premise, but I think it's just a premise, and I suspect that when we're looking at it in February or March, we'll see that the market wasn't quite ready and China wasn't quite ready. I hope that answers your question. So, okay. So let's see. So Ben, we'll get you back. I know you were in a bit of a rush to go, but that was my answer. You can listen to it afterwards. Meantime, let's get back to the first question was UWM. So the UWM, I don't really want to do the UWM other than to give it a parallel. It is the ProShares Ultra Russell 2000 long side. So let's just go, if you don't mind, Jim, I'm going to go to the IWM. I know you look at it the same as I do. Sideways consolidation. This rectangle formation is really not an oval. This is more a rectangle. Can last a lot longer than your patience. My suspicion is we could pop to the upside to the 147, 148s, and then all of a sudden we start to come back. And if it starts to take out 145, 50-ish support, either with or without that pop-up, be careful, because at 140, under 144, it starts to go, that MACD will start to deteriorate. At this point, the MACD is very strong, and I'm saying that's the reason why I say there's still some internal strength for a little longer in the key indices on the daily charts. It's going to take a really bad news event to knock the IWM down to the 143s. And if it gets to the 143s, I think it's going to be moving quite a bit lower before it comes back up. But I wouldn't be surprised if all of the indices are just stuck in a range for now, a range of maybe 4%. I'm not sure I can make that 2.5% to 3% up, and maybe even 2.5% to 4% down before a much bigger decline occurs. That's just what I'm looking at right now. So the question is, all charts are similar. Any upside for the IWM? Sideways peak D. Been in since 130. I didn't see that. Congratulations. So you've been in. Oh, then I'm going to do the exact one that you're looking at. Whoa, I should have seen that. I didn't read that last UWM. Congratulations. Using the Chapman wave, Jim. I like that. So very nice. He's in from the third, right there. So you're in from the 50-something, and this thing is trading at 62. I'm going to make it real easy for you. All I'm going to say is I would hold along at this position. I would only start to take off under two conditions. One is if the UWM trading is 62.36 with a low today of 61.36, if it starts to trade at 60.95, no, I don't know why I would even give up 1 3/4 points, almost 2 points. No, I'm going to say this, Jim. This is where I want you to put 1/3 of your position, have a trading stop. It's a 62.36. Make it a 40-cent trading stop. And I'll talk about it more tomorrow. I don't think we need to do anything other than that right now, because it could go to a leg E, and then it even has
The universe provides us with opportunities all the time, and I was no different. In 2006, I invested $2,500 in a 2-day master trader course taught by Tom O'Brien, then ranked as the #1 market timer for gold. The fact is, if you want to be the best, you must learn from the best. Hi, I'm Steve Rhodes, author of Mastering Probability and the Market Timer of the Year for 2018. To celebrate this accomplishment, TFNN.com is offering you a free 2-week subscription to my award-winning newsletter service, and there's no charge to you until day 15 unless you cancel sooner. That's right, we're waiving the normal upfront deposit, and this offer is available to anyone and everyone, even if you've tried Mastering Probability before. Sign up now, and I'll teach you the tool that identified the bottom in the Dow on January 26th, the morning that led to the largest daily point gain in history. This offer will expire on February 10th, so go to the homepage of TFNN.com now and click on Mastering Probability.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hello, don't forget, Steve Rhodes comes up, and you got Dave White, and you got Tom O'Brien. So let's just go to this Frontier, Research Frontiers Inc., trading at $2.51, $2.51, up 11 cents. So, Walter, I'm going to do this tomorrow in greater detail, but right off the top, I'm going to say you've had a spectacular run in this. You've done it very nicely. Now you're out looking to get back in. It's at $2.51. I'm just going to say it's between $2.39 and $2.20 that I'd be looking at it. Probably I'd like the lower price, closer to $2.30. Let's not do anything yet. That's just my reasoning right now. It's had a really good run. It's in a leg D in the weekly. I think it might even make a peak D this week. I'm not sure. There's a high risk reward. But at this point, I see a little bit more risk than reward because it's closing almost at the low of the, no, it's not closing, it's at almost the low of the day today. Having made a peak F in the daily, could have recycled. I'm just treating it right now as a peak F. It has a potential instant restart. Too big a move on this down move for me to think that it's going to go to a G/C. So just let's say, hold it for now. I'll do it again tomorrow. Just please remind me, I will do it tomorrow. And the price I'm looking at is between 232-ish, 239, 232, but I'd really like it between 232 and 228. That's where your risk reward is best. Next one, Hector wants to know is, hi Basil, nice action today in NBEV. Is it still on track to make a run for the top? Thanks, Hector. So NBEV should just for full disclosure, is one we have. And we got it at 7 or 692. And right now it's trading at 719, having hit 745 already today. Yes, I do believe it's going to make the cup formation. I think it's going to try to take out 762. That'll start gray leg D in the weekly chart. You see this big line here? This is A right there, because the low is this low right here at $1.30 in August. It hits $9.99. This is the thing about the cannabis stocks. So you've got to be really careful. But we are in. Now we can put a decent stop in if it can hold nicely today. But it should try for the next level of 8 right there, and that'll take it above the 762 level. Then it can have another digestive phase. Hope that helped you. Stay tuned for Steve. Check out my opening call. I think you'll find it profitable, hopefully, and very beneficial. And of course, I'm always explaining the Chapman Wave methodology, as I did for the all-day session a week from yesterday. So have a great day.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.